Start. Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's 9:33 a.m. Eastern Standard Time on September 23rd, 2017. This is a Clueless Trading Advanced Coaching Session free webinar that will be uploaded to the YouTube channel. Make sure that everyone has their email subscription on the YouTube channel, so anytime anything is put up there, which is basically my way of doing blogs in the form of visual videocasts, you are automatically notified. Full disclosure, this is purely for financial education, not for any solicitation or advice, and we shall begin. We have a quick roll call. We have great members here and friends. We have Corey, Golfman. We have Fish Eyes. We have Jasco. We have two new members who are attending. One is Jose and Kyle. So just make sure that all of you are connected, audio and visual, and I'll start. Good. So first of all, what I want to cover today is a little bit about the dynamics of momentum trading, the actual logistics of what happens on the ground, not just predictive forecasts and charts like that, which I cover extensively all through the day, as well as on my weekly videocasts. I'm going to start off with a couple of broad points. This coming week is going to be a very important one for different reasons. First of all, it is the end of the third quarter, not just the end of the month. So September 30th is the end of the third quarter. So you're going to see a lot of jostling and different portfolio management moves by the largest players in the market, which are obviously mutual funds, and then the state pension funds, which are trillion. Okay, Kyle is saying that he can't hear us. So let me just try to help him out. Please allow me a quick minute. Yes. You guys can all hear me, correct?
Yes.
Okay. Kyle is a new member. Just wanted to keep him in the loop.
Yeah, it looks like Kyle is showing a phone, which would mean he needs to switch his audio setting to computer audio instead of phone call.
Yeah.
Yes. Thank you so much.
That's in settings.
Okay, so he needs to do what again? I'll tell him on the other side. He needs to basically change his audio setting. That's right. He needs to change it to phone call. Exactly. I see what you're saying. Okay, bear with me one second. I'll put you guys on a quick pause. Carl, can you hear us?
Yes, I can hear you now.
Okay, I'm going to mute you on the cell phone, and you tell me if you can hear us. Hold on.
Okay.
And just type it in. Can you hear us, Kyle? Okay, good. Thanks, Paul. Are you there? Is everyone's good?
Yeah, we're good.
Okay.
Yeah.
So we take that, we want to provide excellent customer service. We take that extra step of reaching out and making sure that, people are connected. All right. All kidding aside, let's see. That's called extra customer service, like calling PSENG, right? Yeah, right. Okay. So a couple of quick things here. Number one, so as I was saying, that next week is going to be a very, very important week. We have tax policy stuff that's going to be coming out on Wednesday. We have Janet Yellen speaking, just a standard speech, I believe, also on Wednesday. We have, most importantly, the month end and the quarter end of the third quarter. Very, very important for the survival of the money management complex, which is primarily the mutual fund, and of course the state pension funds, the TIAA, CREFs, the CalPERS, New Jersey Central Fund, the New York pension funds. These are multi-billion-dollar players, heavy hitters, and there's going to be a lot of jostling that goes on. As they position the end of the quarter, try to show off some of the strongest stocks, try to throw out some of the laggards. It's just standard window dressing that's known in the industry. And in that case, you will see selective markups where they will be adding certain stocks which they don't own. And in the end of the quarter, so it shows up on their quarterly reports, and you get a boost on that. So you're going to see a very selective fluctuations, not a broad-based everything goes up at the same time. Well, that's pretty much what's been happening for the last couple of months anyway. Also, you're going to be hearing about concrete proposals on the corporate tax rate cut, and hopefully rate cuts for individual tax rates and things like that. The healthcare bill is still up in limbo. I believe that it will, at the last minute, the Obamacare repeal will pass. Obviously, a lot of politicking going on that. They will make adjustments, and I believe this is their last chance to get it done. So you are, and then you'll have some sporadic earnings coming out of big names like which affect the Dow, like Nike and things like that. Starting off on Tuesday, I believe. So just be prepared for all sorts of fun and games. But that's just the nature of the beast. So saying all that, what I'm going to do today is I'm going to give you a quick snapshot of what I'm seeing on the broader side, on the macro picture, and then I'm going to go into particular individual stocks and what I saw in them, and why a lot of them were substantial movers. And also I'm going to highlight a one-day mistake that I made on Tesla, which was on Friday, because after all, a strength of a trader comes from back testing and understanding what they're doing wrong. Only then, I guess the same thing applies in life, can we spring forward and do it more right, for a better choice of words. So let's begin. So first of all, what we are seeing in front of us is, I'm going to do the daily. I think that's a better picture. And I'm going to completely take out all the drawings and start off from thing. This is as some of the newer people like Kyle and Jose, just follow through. I'll keep this very simple. We're not going to get into intricate details of all kinds of stuff, but so I'm going to begin from here. I'm going to begin from looking at a longer term picture on the market, so you know what the path forward is, or what can be. Obviously, things are volatile when you zoom in on a intraday, intra-week basis. This is a monthly chart going back to some significant significant macro bottoms on the market, which was approximately around the S&P 1800 range, which just seems like decades ago, but it was the first 1800 level or so was tested here. I'm going back to August of 2015. So you're talking 2 years. And we are going to basically draw some lines on it. Okay, so first and foremost, when you want to keep a broader picture on the market, which is important because it sets your mental frame in whether you're looking at the market with a emotional bias of, oh boy, here we go, you know, it's the end of the story, end of the bull run, things like that. Just rely on, try to suppress your own emotional thoughts. We all try to do that. Some are better than others, and that applies to both life and in trading. But just stick to some very simple technical guidelines. So here we are at the 1800 level. Here we are today, 2 years later, a little bit more than 2 years later, at 2500. Okay. So, you know, pretty substantial gain. You know, you're looking at approximately a 38% move from here to, from these levels all the way up to where we are right now. Pretty, you know, it's very impressive. So you're looking at, if you look at it on a 2-year basis, you're looking at roughly about 19% a year. Nothing that blockbuster when you really think about it. When the larger context of things, keep in mind that most people forget that foreign markets in Europe and Asia are up an average of 22% plus for this year alone. So why can't we do better? You know, sometimes you got to think like that. So saying all that, let me just point out the simple things that you got to watch for. First of all, the moving averages. The moving averages are moving averages. They're moving averages of prices over a period of time. In this case, it's the week. We're talking about a weekly chart. So we're looking at a 20-week moving average here. We'll start off with the yellow line here. We're looking at a 5-week moving average, which is really the short-term directional bias on the markets. Like we trade the 5-day moving average, for example, to look at short-term intra-week trends on a particular stock of the markets. Well, so the 5 is important. So the 5-week is right now, as you can clearly see, and just visually, it's trending higher. It's been trending higher all the way through, in between corrective phases, which were proclaimed, where the markets were announced, were proclaimed as a early death for the markets. Wasn't the case, because the larger trend lines, which are extremely important, such as the 34-week and the 50-week moving averages, you can clearly see are still moving on. They're still, you know, curving higher, and the trajectory is still up. This is a very important line. Don't bother with that too much, but this is sort of the ultimate, you know, red or magenta line you do not want to cross, because once you cross below these levels, in my opinion, based on what I have seen over the years, is the start of a short-term bear market. Okay, and so that's way below. And you're looking at 2100, 39, 2140. So that's roughly, you're looking at, and keep these things in context to keep your head straight while you're doing your investing and your trading. You're talking 360 points on the S&P 500 or the E-minis, and roughly that translates into a drop of about 1,800 points or so on the Dow Jones Industrial Average. So once you break that, then things get really rough. That's the 150-week moving average. Okay, so on a weekly basis, all these lines are moving forward. I always looked at the market as a highway, that the moving average is a highway that the market travels on. When you deviate too much from the highways, okay, when you deviate too much from the highways, specifically the larger ones, for example, the 50-day moving average, you fall into a ditch, for example, you have a tendency to gravitate back. In this case, back in 2016 and 2015, we fell below the 150-week moving average. Whichever the case, you get very powerful snapback bounces, which last for weeks. 1, 2, 3. This is your reversal hammer, so you can count that as the first week of reversal. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's 11 weeks of a powerful rally. And in between each of these candles, when you zoom in into the intraday, like a 1 hour, then you see a lot of fluctuation. So it's not like these candles look so beautifully big and green, which are billions and billions of dollars entering the market after a massive, after a double bottom. These are very powerful formations. Double bottom hammer reversal. You can see that. That's known as a hammer reversal. And very bullish construct on the markets and on technical analysis on candle dynamics. So this is where the first, in both these cases, big time shorts, institutional shorts covered their position, and they covered their position by going long. They buy, right? Simple stuff. And then the follow through. Very, very important formations. Here we had a similar, this was more of a double bottom bullish engulfing candle. This was not a hammer reversal. Hammer reversals look like this. Like I always say, like a Chinese firecracker, right? Or whatever firecracker. And that's those hammer reversals from a swing perspective have to be bought. No question about it. And the confirmation generally comes after the second week. That's that. And then as they're crossing over these highways, you want to be involved in that particular trade in the market and continue to be bullish. So now, as I was saying, these moving averages are, in a simple analogy, are the highways that the car travels in. When you fall way off, they generally act as a magnet where you want to get back on the highway. And if there's a rejection, then obviously there's more fallouts. Maybe there's a triple bottom. Maybe it's a complete breakdown, in which case you can, on a high probability move, short the markets on a swing basis and stay short for a couple of weeks. But that's not really what happened. There was a chance of it happening, but it didn't happen. So anytime you deviate way past the 20, which is the best way of looking at it, 20-week moving average, you tend to come and retest that at a within a couple of weeks. All right. In other words, you can't deviate too much. It's known as standard deviation. Too much away from the highway, in which case you want to come back to that lane. So every single time you've noticed that when we get too far away from the moving averages, you tend to deviate towards that. The same thing will happen here, and I believe that's going to be happening very soon, probably by we calculated I believe in the last video cast, after the first week of October. And so retest of 2443 means we're going to drop roughly 50 points. So 50 means that you're going to have a 300-point move on the Dow. That's going to be your first rest stop. If that breaks, you're going to kiss the moving average. This is a very important one, around the 2400 level on the S&P and the E-minis. So you're talking about a 100-point drop from where we are right now. So that means a 600-point drop on the Dow Jones Industrial Average. And of course, those things will have a amplified effect on individual stocks, right? Now, once you break the 34, things start to get hairy, okay? Because a lot of stops, institutional stops that are set at these levels are going to trigger. So you're going to have automatic technical selling, which will bring you down to test the 2342. Now, these don't happen in one day. They take weeks to happen. I'll certainly be there to alert people on those, any type of movements that I see on the macro front. And of course, you'll be, and those will come because of all kinds of different reasons, political overseas global risks, and all kinds of stuff. If you break the 50-day moving average, in that case, the market is entering a short-term bear market. I shouldn't say bear market, but let's say a mini cubby bear market. How about that? And so I've explained all that stuff. I don't want to get too detailed here, but there is a gap here to be filled, a substantial gap, and that gap is in the zone of around 2365 or so. But we'll deal with that as we come along. And this gap will get tested. Now, will it get tested in October? Can happen. And you will get a sizable bounce from there. Whether or not we are in a process of making a confirmed top, we don't know yet. Because in bull market situations, you tend to create flags or small corrective actions such as these. You see quite a few of them, where everyone kind of panics. This lasted 1, 2, 3, 4, 5, 6, 7 weeks in between, in between sharp movements higher. But you can see these are known as consolidation channels. We see that in stocks too, big profit taking, and quite a few of them. And that's normally the behavioral component of a rising bull market. Corrective pullbacks, not complete technical breakdowns, as I've explained, which happen below these levels. So here there was a big technical breakdown. Obviously, this wasn't it. This was a consolidation channel that just completely broke down, and that was back on way back January, February, and we turned in February of 2016. Anyway, so if we wanted to get a broader idea where you can see where the markets can go, let's draw a line. Now, so far, the simple explanations that I've put out there make sense to all of you guys. You don't need to know like advanced technical analysis and all that stuff. I'm just showing you. I'm just explaining to you in the basic, simple terms. So I'm going to do this. And as I'm doing this, just keep in mind that the human factor in the market is always there. There's no question about it. But also keep in mind that the markets are extremely, and have been more so every single day, robotic and mathematical. So technical analysis, there's a saying that technicals precede fundamentals. Well, that's pretty much the case through and through. This is very important to focus on the technical side of it and then use your own gut instincts to do whatever you need to do based on some of the tools that I provide and the alerts and all that stuff. So looking at it up here, you can see that this channel, I can tweak around a little bit, I believe. Let me see here. The mid channel is not that easy to identify, but I'm looking for points of maximum points of contact, which means that I am looking for things like this, maximum points of contact, right? So the next point of contact comes in at approximately around, which I've said for months now, around 2560. 2560. So you're talking about another roughly 300 points or so on the Dow Jones Industrial Average, which is not inconceivable, right? It's not like, wow, we're going to go up another 1,000 points. The broader channel is showing 2638. As I explained to you about the standard deviation part, when you move too far, too fast away from the highways, which are the blue line here, the 20-week moving average, the 34-week moving average, the 50-week moving average. When you veer too fast away from the highways, you get a reversion to the mean. That means, simple English, you come back to the lane that you're driving in. So you're not going to go completely ballistic in one-way fashion all the way here. These have to catch up with the prices or the candles that you're seeing. So in other words, you could get up here and then have a sharp pullback. These keep on trending higher, as have been the case, and then you revert back to the mean a little bit. So in other words, people who get too bullish, which nobody is, believe me, not institutions, not mom and pop, not traders. The level of pessimism, as indicated by the American Association of Investors Intelligence and the new and investment newsletters out there, which are basically a lot of big shots writing in their newsletters. Mine can be considered a investment newsletter or a trading service, so I express my opinions, but that is also at the lowest, at the highest pessimism level and the lowest bullish level since prior to the elections. Go figure, right? And the markets are making new highs. So there's a big divergence. And obviously, if you are that pessimistic, that means you're not really walking the walk as you're doing, talking the talk. In other words, less money is going into the markets, and that is a positive. That's a contrarian signal. That means a lot of cash is sitting on the sidelines, which I know it is, more than $5 trillion or more, and some of it has to roll back into the market as the market continues its movement higher. They're forced to come in, and that's just the way it works, Nothing to reinvent here. So high level of pessimism is good. More cash on the sidelines. As they re-enter the market in small blocks, the market trends higher. So that's it. So that's your longer term picture. And bear with me. Clean this out so you can see that clearly. One level is here, which is approximately 300 points higher or so from where we are today on the Dow Jones, on the broader index. And you can draw a mid channel here too, which I've done on many of my charts. And once you tune your mind, your head a little bit towards the technical side, a lot of, in fact, all the movements on an intraday basis, intra-week, the back and forth in the market all starts to make some sense. And if you have a sense of the roadmap, then you tend not to panic on doing what you're doing on the trading landscape. Am I clear on that? Yes? Jose, you getting it?
Yes.
Good. Kyle?
Yes.
Excellent. So anyway, simple stuff. So that's it. So this channel is at around 2460, 2471, and that's I would say that this is the thing that we're this is the mid channel that we are traveling in right now on a weekly basis. So far, just looking at the simplest form of indicator that all of you guys can use, doesn't take any expertise other than some visual expertise of understanding it, is the full stochastics. This is a momentum indicator, great reliable indicator, and you can use it on a short-term basis. You can use it on a longer-term basis, in this case a longer-term basis on the weekly, and you can clearly see here that it is starting to get overbought. Overbought levels are generally close to 100, and we're not there yet. And once both the all the parameters, the orange line here and the white on the full stochastics, both get up here, you tend to start to see a overbought, severe overbought conditions on a weekly, which means that the market's going to pull back and start to do its resets. A reset is when it goes from overbought to oversold. You see me talking about that all the time. Very, very reliable. Use it. And when you look at my charts and stuff, you can basically see that very clearly happening all the time in stocks. So you get down here, you buy hands down, and you start to see a crossover or a move up every single time. I mean, every single time you're going to see a pretty substantial move higher. So we are getting overbought, and that means the market is in a topping process, as I've explained. Okay, no more to say on that. Any quick questions from anyone before I move on? No?
No.
Okay. Now, here's the same picture on the S&P 500, and those were futures, right? Those are showing you. So you are starting to see on a weekly, you are seeing a little, I'm going to take this out. This was an ascending triangle. Some people might wonder, what is an ascending triangle? Well, look up. I have a whole video on basic chart pattern analysis on my YouTube channel. Highly recommended, as I've told all the new members that they should listen to it. There are fantastic videos by great people on YouTube. But ascending triangle, just what it says. It's a triangle. Look at that. There. Right? So it's like this. It's an ascending triangle. Well, I called this ascending triangle weeks ago, back around the July, August, early September timeframe, and we broke out. We broke out of the ascending triangle, and you can see that right there. There you go. And that breakout happened on the week of September 11th. Interesting, huh? How some of these anniversary dates have effects on financial market. So that's great. Now we have a little. Everyone see this? We have a little red cross. This is a perfect red cross. This is known as a doji. It's a sign of indecision. And for obvious reasons. There's a lot of stuff coming up next week. So there is a point where they say, okay, let's see what happens coming out. You can't game political decisions out of Washington, D.C. That easily. And so there's a minor doji here. And that doji is going to either turn, and this doji was for this week, right? This doji was for this week. So the following week, generally, after you see a doji formation, you get a green week. All right, just standard procedure. If you look back here, there was a doji here after a breakout. Markets moved higher. Look at that. The markets moved higher. This was a move from and listen carefully, from 2097 to a high the following week of 2123. So that's 30 S&P points from here. Very similar to here. This one is a longer tail though. And then sharply higher during the week and closed down. So sharply higher during the week means that the markets traveled from 2097 to 2123. That's 26 S&P points, roughly about 130 Dow points. Now, the average investor says, hey, I don't see a real move here. Well, let me just tell you, for traders and for people who play volatility, and individual stocks went up quite a bit between this small little move here. That small move is 130 Dow points. And then by the end of the week, it was showing a basically like we call it the inverted hammer. Right there, that's an inverted hammer. Just the opposite of a reversal hammer reversal. And an inverted hammer, just like a hammer dropping on your head or your hand, hopefully not on your head, is a bearish signal. That's exactly what happened here. And the following 2 weeks, the markets went lower and then back to the highways and all that good stuff. So we have that small doji here, so we could get a nice move up towards the end of the quarter, and then we start that mini pullback scenario starting on the first part of October. That's exactly what's going to happen. Now, this is a high probability forecast. It doesn't mean that it's 100% certain. Nothing is. So far, so good. Let's move on. Let's talk about trades. So the first start off here. And I'm going to pull up Tesla. Always good to study the perfect. Now, let me zoom out Now zooming out, this chart on Tesla has made many members very decent dollars, trading dollars, long and short, primarily long. It's a very, very defined chart that have been constructed. I don't tamper too much with it. I just tweak the lines a little bit here and there. I do not make any radical changes to the structure that have been drawn on this chart. I want you guys to focus for the next couple of minutes, and I'm going to walk people through it. Many of you have been walked through this. Many of you have taken full advantage of it. And this is a classic example of a high beta momentum stock that has very defined patterns. And nobody needs to be a rocket scientist to see that there is a big pattern going on. All right. So bottom line is, this is Tesla all the way back at 388 through big fluctuations, not a one-way straight line. And this is something that the newer members like Kyle and Jose need to completely accept and bow to, which is markets don't go up in a straight line. They do not go down in a straight line. They move in an algorithmic fashion. So even though Tesla went from 388 all the way down to 300, right? A correction of approximately 30% from here to down here, back in June and July, not years ago, back in June and July of this year. It did not happen in a straight line fashion. And every single one of these levels, it found some sort of support, tried to bounce, and then the big fallout. Once it fell here, created a substantial bullish reversal candle, a powerful one. That's what the shorts covered. You can see that green big. That's a bullish engulfing candle. That means the shorts are covering. That's a first sign of going long. We traded this very methodically, this whole chart, and the stock basically climbed to the mid level, which is known as a 50% retracement, Fibonacci retracement, not shown on this chart. It's on my other Tesla charts, and comes back, almost retests that bottom, holds, and just decides to just go nuts. That is a powerful double bottom, and it creates a W formation, which happens not a lot, but it happens on major momentum stocks quite a bit. Okay, they say in grandpa's market, you got to be a fast runner, you got to rely on the technicals, and you got to keep whatever you're thinking locked away in that little basement, the demons in your head. I mean that. And then it just overshot, and so this took basically between July and August. I said the stock would test its old highs. It tested its old highs. I said that was the time to sell. It certainly did. So this is a very defined pattern on Tesla. And as you get more knowledgeable, some of the newer members, all members included, on technical analysis and how to read these patterns, you're going to be in good shape on getting the trade done right. Not just because you did 1 or 2 days something wrong, like I did on Friday. So that's what I'm going to get into right now. My trade is not over. My trade is for the end of the month, and I will, with some doubt in my mind, but I have a high probability of making pretty substantial gains on this particular trade. First of all, when this particular falling wedge, this is known as a falling wedge. I won't get into it too much, but this line here, see this line here? I'm going to make it thick, very thick. Okay. And this line here, bingo. So that's a falling wedge. And let me zoom in. So this falling wedge The stock, and I've shown this on my my other platform too, on the quad algo HFT platform. It's more clearer to see. But this falling wedge, it hit the bottom of the falling wedge and had a nice reversal hammer. Can everyone see this? I'm zooming in. Can everyone see this?
Yes.
Okay. Kyle, can you see it? Jose?
Yeah, I can see it.
Okay, good. Because these are important. This is what makes you money, you know. Not like always focusing on the bigger picture, because the bigger picture doesn't make you the short-term money. And I got to pay bills, so I don't know. Maybe you guys are some Dubai sheikhs or something, you know, got a couple of billion in the bank, you know. So if you got to pay bills, you got to make money on a weekly basis, on a not necessarily a daily basis, because of the volatility in the market. It's tough to always see a green P&L at the end of the day, which I would love to see every day, but it doesn't work like that. But anyway, on a weekly basis, you should be net up. That's a good way for traders to think at the end of the week. So this one had a nice right off the falling wedge, the lower end of the wedge, it moved. And these moves are from 364 up to 367. Not bad. Pulled back a little bit. Nothing. No technical damage. This was on the 21st, which was Thursday, right? I'm showing you Thursday. Now remember, we played all these moves higher. We played this move, and then we started to get in again as the stock basically, you know, started to move down. This happened on the 20th. So you're talking 20th was what? Was Wednesday. So anyway, so you get to the bottom of the falling wedge, you start to move. It moves nicely. It tries to go to the upper end of the falling wedge right here at 370. So from here, 365 to 375 bucks, not bad. You know, you scalp some money off there. This was on the 22nd, right when the market opened. Shooting higher, started slow, up almost $2.50. That's Friday morning, right? Friday morning. So I alerted the buy. It looked very likely, given the deep oversold conditions. That's why, you know, this thing is, you know, all the way down here. That's why I drew this red, sort of the red line, because these are normally big buy zones. Okay, every single time when you get that deep oversold. So bottom line is there's a lot of things happening here. So this was a nice candle which turned within minutes, and you all of a sudden, even though it's green, it turned into a hammer reversal. I'm sorry, an inverted hammer. You guys can see that right there. Now for tactical tactical traders, that could be considered a danger sign. But I was looking at many different things. We had some big trades working on the other side, like the lotto ticket, you know, the Intercept Pharmaceuticals complete breakdown. There was AutoZone running. All kinds of different things were happening. A couple of our favorite biotechs were solidly performing, uptrend, you know, Juno and things like that. So I wasn't really focusing on it as much as I should. Anyway, the calls were cheap. They were around the $4 range. So once it started to come down, I figured, you know what, this thing is going to basically start to bounce from here, just the way it did all these times. Well, it didn't. So a technical trader's mistake on a day trading basis, mind you, on a day trading basis, is that once you see a candle of this size, you want to get the heck out of Dodge and go short. I didn't. It's okay. I am looking at some, you know, my trade is not over yet, so I'll give you the next phase of what the plan is. So bottom line is, once you get this type of huge bearish engulfing candle breaking below this triangle, or the falling breaking below this falling wedge, rule number one: you sell, you go short. That was my mistake. I didn't. So bottom line is, on a intraday basis, I suffered the consequences of that. But like I said, all this other good stuff was happening, so I wasn't giving it as much attention that I should. So saying all that, it broke through multiple levels, and now approaching. It tried to, tried to come, tried to turn. This was good for about 2 points. It tried to, create a reversal, but on top of Tesla, it wasn't that it was just happening out of the blue. All the major tech stocks were under pressure. We were short Apple lottos, which were expiring on Friday, did very well. So Apple was dragging things down. Amazon was down 9. Like all the NQs or the Nasdaq futures were under heavy sell pressure. Not a change in trend. They were just under heavy sell pressure. It happens. The sector money was moving into financials. They were doing well. They were moving into biotechs. They were moving into Raytheon and one of our big swings, URI, United Rentals, Caterpillar. So all those babies were sucking in the money, so they were taking the money out. That's what the hedge fund flow does. They were slamming the Nasdaq tech ETFs, and the money was flowing in that side. So given where we were at this point, I decided, you know what? I'm going to basically look to see if it's already approaching the upper end of this gap. This is a big gap. Now, two things will happen in the coming days. Lottos are very cheap now. So I lowered my cost down to about $1.75 on those 375s. Also bought some 360s. They closed at, and these are lottos, so they closed at around 60 cents. Okay? And this is not the first time. I've done this many, many times. So, okay, so I'm down about 60% or so on that trade, intraday trade. But I'm not looking to trade that day. I'm looking to close the trade by the latter part of this coming week. So the big gap here. This gap looks like it wants to hold. And if that's give or take $1 from here. And the trade the trade roadmap is, from a pattern symmetry standpoint, that's why these arrows are there. There is a big downtrend line here on Tesla at 347. See that downtrend line all the way from here? Now Tesla is a very mechanical stock. So you got to play it like a engineer or a robot. So you got the upper gap fill here of the stock at 350. A slippage would bring it down to test the downtrend line. Downtrend line retests are quite common in high momentum stocks. And of course, if this line doesn't hold, no point on cost averaging or whatever. The stock is going to basically test the lower end of the gap, 344. But there's going to be a lot of pressure if it breaks below the downtrend line, because there is a gap between that and then down to 336. So you can flip short from this level, from people who don't have position in Tesla. You can, if it does not hold the downtrend line, and I'll be certainly showing that very clearly, which is around 347. If this retest doesn't happen, number one, this one, number two, this one, if these two don't happen, then the stock is going to break and drop another 8 points or so to a pretty substantial level. Now, if there is something really horrible coming out of Tesla, then you are going to see levels of the 330 level coming into it. So on the short side, it's going to be a very profitable trade. But mistake one, when this falling wedge broke, and I saw this type of candle, should have just blown out of the trade and gone short. From the swing perspective, it is becoming very attractive on a technical level, because this was the big fat breakout that we were all positioned in down here, which carried momentum big time and kept on going after creating a small consolidation channel. A trading range between 360 and 372. These are nice trades. Okay, and anyone can just trade. I know people just trade Tesla alone, Tesla and Amazon. That's it. And then the big fat breakout over a powerful. We have to go back to see why this line was drawn, because that was the previous line where the market it had stopped the stock when it jumped all the way from the bottom, right? So from 310 all the way up to 370, obviously that's a major zone to contend with. That's why this line was drawn. So once it broke below that, you got automatic selling, tried to stabilize, and then this, and now here. So this gap is a very important gap. If this stock, you can clearly see this now, is a pretty cool, huh? Very cool. Now, how much further can the stochastics, and this is the fast stochastics that I'm showing, the 1413. For people to educate themselves on that, just Google stochastics, go to Investopedia. They have great videos. You can see what's a fast stochastic, what's a full stochastic, what's a slow stochastic. They're just different parameters. You can certainly self-educate yourself on that. And I don't change these parameters. Some people have asked me. I just use the default, which comes on these platforms. So saying all that, very deep oversold, can keep on rolling oversold. A stock on a downtrend can remain oversold, just the way a stock on an uptrend can remain overbought. A stock on a channel downtrend can remain oversold for a bunch of days. In the case of Tesla, it's not weeks and weeks; it's days. Okay. So I'm looking at this on a pure technical basis. I'm taking into account also the end of the month, end of the quarter, window dressing markups and stuff that come. So we shall see. So at this point, if this happens, you're going to see a pretty substantial bounce on the stock. And this is not a stock that moves $2, $3. Seldom does that. You're talking about 5, 6, 7, 8, 10. So either it's going to come down and break below these levels, and that those are, that becomes a clean short, tactical short, or it's going to basically bounce from here towards recovering towards 364, and these are big numbers because the stock closed at 350, 364, 14 points. You can get a double to a triple on those cheap options. So you got to look at it like that. So either it's going to be a bounce towards 371, which will again attack that very important line. It will definitely find resistance here. Okay. It's found resistance multiple times. I showed you this line was that old big supply zone, the 371, 372 level. And the bottom line is that if it breaks that, all hell breaks loose. It's going to go straight up to 388. Straight up meaning, zigzag candle is going to get up there. Fails here, comes down. Then it becomes somebody fill in. What pattern does it become if it fails here and comes down?
Dragon bullish.
Somebody else? Jasko knows. Smarty pants. How you feeling, Jasko?
Yeah, getting there.
Okay. It becomes
pattern-wise,
pattern-wise becomes a huge head and shoulder. You know what I'm saying?
Mm-hmm.
Yeah, it becomes a huge head and shoulder. In other words, that's it. Short it. Yeah, that means the stock will not go back to its highs for the time being. Because if you notice, and Corey is partly right, it can become a dragon bullish on a short-term basis, right? It can do this. Absolutely. Tsla look at this. It basically traded in between a trading channel of 358 and 340. 20 points back and forth, 15 points before it decided to break out, right? However, a bear will say that here's your head, because this is what a This is what a head and shoulder looks like. This is your neckline, and a breakdown is a breakdown, and then it finds lower levels, tries to bounce. This is what a inverse head and shoulder looks like, right? Left shoulder, right shoulder, head. Very powerful patterns. Head, left shoulder, right shoulder. That's what it's looking like here. So we're going to be playing the bounces. Never get married to Tesla. Never get married to any stock to start with. You know, just stay married to whoever you're married to. Okay, how about that? It's a good piece of tactical marital advice. So bottom line is that that's what's going to happen. And if it does that and it breaks, this is your neckline here. To be honest with you, this gap, this is your neckline. You break this neckline, you're looking at nice sizable drops back down towards that 300 level. So that's what's really critical about it. So we shall see what happens. If it does that sizable bounce, you gotta catch it. You gotta stick with it a couple of days. These things happen fast. It can happen one day, right? We see that with price lines and the Tesla kind of stocks, 13, 14 bucks, bang. So you got to be quick. You can't be sitting there scratching your head going, oh God, just have a small position, just let it run, or have a big position, let it run. Okay, so that's it. So everyone understood, right? The technical mistake intraday was with this breakout is a pure short sign. I get scared shorting Tesla because it generally has. You got to be very quick, and when it turns around, it snaps your head because the short position in Tesla is still pretty substantial. And so that was also one reasoning why I said, I'm going to leave it alone. Whichever the case, you can clearly see this is where we are. Either we do this from this level, or we go on a one-way fall down. Generally doesn't happen like that, like a one-way fall down, right? Either it gets a retracement bounce, what we call a dead cat bounce, and then it hits these levels again, and then decides to do what it needs to do. So that's it. Now, let's move on to looking at.
Hey, Klug, a question. Ahead. Would you have shorted that once it crossed that one line? Is that the point that you would have taken it, having hindsight?
Okay. First of all, I just explained it about 6 times. All right. That once you broke below the falling wedge, and you saw a candle of this size, and then it broke below started to break these support lines. Yes, the answer is yes. Absolutely. In hindsight, yep. And it would be a very profitable trade for that day. But because I didn't have a substantial position in it, and we were watching all this other stuff and doing very well on that, in answer to your question, yes. Once you break this falling wedge from down here and a candle of this size, it's just the same with the opposite. When you see a candle of this size, you got to go long. You got to go long. Retail traders don't. They're like, oh, I missed it. It's too late. Garbage. It's, look at it. Every time you see a massive, and in cases of Tesla and these type of stocks, it happens quite a bit, because these are extreme high momentum stocks on big companies. So when you see candle magnitudes of this size green, you got to go long. You got to stick with it till it reaches those levels. The same thing on the downside. You see candle breakdowns, you stay short. So that's the answer to the question. Good. My good friend Fish Eyes asked me, how does Tesla fit in with the window dressing theory? Tesla has had a pretty, if you look at the bigger picture, let's look at a daily. Oops. Looks like we can't do the daily on this. It looks like a one of those mathematical puzzles you never want to do. Let's take a look at, one second. And again, a very, very firm and strong reminder. Get to use investing.com. It is one of the simplest way of looking at things visually, where your brain can register the movements and what I'm showing on those charts very quickly. So instead of having to scratch your head and look at complicated things, very, very important. You can use this on your phone. You can use it on your tablet, whatever device that you're using. All right, think or swim. So here's your daily chart on Tesla. And my good friend Fishey's a question was, how does it fit into the window dressing part? So let's look for this quarter. When did this quarter start? August, September, August, right?
Frank, that chart says EEM.
Oh, how the hell did that come? That's what I was wondering why it's
Where's that double top? I don't see it.
1 second.
There we go.
Okay, so we are looking at the quarter started in end of June, right? July. So July, August, end of June. June, July, August. 1, 2. Started in July. So let's do a simple thing here. Jim, you there?
Yeah, I'm here.
Okay. So in answer to your question, let's say a manager bought the stock right on the first day of this third quarter that's ending end of the month. So that he bought at 309. You see that?
Yep.
Okay. Let's call it 310. The stock is at 350. Let's say that a manager who is not so it's even at the close is at 351. So you're looking at 50 points or 40 points. This is the way these guys think. So 40 points on a $310 stock or so. It is still up 13%, right here. It's still up 13%. Put yourself in the shoes of a manager, and this is just for this quarter, third quarter. Now, third quarter is important because it is coming into the latter part of the year. Let's talk about the 240 level, going back to first quarter. All right, first quarter ended. Second quarter started in April, right? January, February, March. Yeah, April. Where was the stock in April? Just follow my thinking. Okay. The stock in April, at the beginning of April, was at 283. See that on the right?
Okay.
So 283, 68 points higher. That means it is up 24%. It is up. This is the beginning of the somewhere around there. Anyway, so from here, 13% from start of Q3, start of the second quarter, it is up approximately 24%, right? So, and of course went much higher after that. But I'm just telling you where his stock is right now, and you can see how when you draw you notice like when you draw this channel, how precise it is. Like here, same type of breakdown. Look what happened. Same type of breakdown. Look what happened, right? So we're going to be watching this line very, very carefully. And I just explained to you that once we break this downtrend line, I mean this lower channel, then we have the possibility of filling the lower gap, which is around the 330 range. Whichever the case, if it follows this pattern, then you get a sizable bounce here. Now, how does it relate to it? Let's say you're a fund manager who doesn't own Tesla. And you haven't owned Tesla since the beginning of the year, Q2. You have left 24%, which for a fund is a big deal. Big deal. All right? Because 80% of them or 90% of them still lagging the market, believe it or not. That's the reason a lot of hedge funds are closing down. And you think about it, these guys get paid big money. And they're like, I don't understand the market. I can't trade this market. It's too volatile. I'm like, great. Very, very smart people giving up is a great sign, because we are, after all clueless, right? So we stick to our technical charts and we do what needs to be done. And these great people, I mean, these so-called smart money is giving up. So the so-called smart money, let's say, does not own. Tesla is not that heavily owned. It is almost 20% shorted too, right? Don't forget, that is a very important buffer under that. No wonder it jumps every time that it does the thing. Now, there's a lot of other catalysts coming along the way in October. There's semi-truck and this and that, all kinds of stuff. So this is not just, it's not empty of positive catalysts that might be coming along the way. But let's look at this. So your fund manager doesn't own this. You left 24% on the table. Very big deal. Q3, nice sizable drop. It's still up 13%. You still don't own it. So in answer to your question, just one probability that for window dressing, they spike it. That he wants to show Tesla in his book because his guys, some of his institutional investors might say, "What the hell, man? This stock has been going gangbusters all the way from 180. That's really where it started to go gangbusters, and you still don't own it. Well, it's too overvalued. The guy doesn't know what he's doing. He wants to live in Mars. So the institutional investors question, like, what's going on with you? You don't own this powerful stock. They have a lot of catalysts. Their SpaceX division might be spun off as an IPO. Imagine that, right? That'll be like an $8 billion IPO, and the frigging stock will jump up 20% in one day. So all kinds of stuff going on, and so the guy basically gets pressured and he said, no, I need to show this on my books. Now, an institutional investor doesn't need to know. And that's the funny thing about all the shenanigans that happen in accounting. Jim might know that. Just kidding. Is the fact that he just needs to show that he doesn't need to show his cost basis. He just needs to show, like, okay, I own some shares on that. So he shows a chunk of, let's say, 200,000 shares. So he goes, okay, you own it. So that's window dressing, right? The markup. So that markup effect could very well push the stock up to what we discussed, which is roughly 14 to 20 points. And who knows? Back towards the highs, which is not that far. It's 50 points from here. So that's the answer to your question. That you could get a nice tradable bounce that we'll take advantage of if we get it, or it will do what I showed you on the previous chart. Does that answer the question? And does everyone understand what I just explained?
Yes, thank you.
Excellent, Frank. One question with that. Would you go through, say, like Nvda, Adobe, and all those? You think that's going to have some window dressing too, with the same thing? I
think Nvda has. Nvda basically was not even really down. It really didn't want to be down. It was only down because the Nasdaq was really pushing it. If you look at the larger scheme of things, yeah, options fluctuate more. We understand that part. But the stock was down like $1.70, right? $1.79. So it's not like it really broke it down. Yes, I believe so. So we can take a look at that. I have a so anyway, we covered enough of Tesla. So let's look at Nvidia. And Nvidia's chart is intact. Okay, I gotta make, like they say, a man without opinion is no man. You know who said that? One of my ex-bosses used to have a big picture of whoever said that. But I'm asking this: a man without an opinion is no man. In other words, you gotta have an opinion, right or wrong. You gotta, Anyone know who said that? Yes? No?
No.
Kyle, you know who said that? A man without an opinion is no man. That's my boy Donald, like he said. You gotta have an opinion, right or wrong. You just gotta do it. So, a man without opinion is no man. Dick Tracy said that. Okay, Dick Tracy, gentlemen. The good old cartoon character, Dick Tracy. So there you go. All right, all kidding aside, let's take a look at this. This is a very powerful chart. Channels. Stick to channels with Nvidia. All right. Nvidia right now, very oversold. You can see that, right? This was that after the stock fell primarily because of the rumor that Tesla's dropping them and they're buying AMD. Very manipulated move that came approximately on Thursday afternoon, 10 minutes before the markets closed. Like, whoa, So you got that gap down. This is let me just walk you guys through it. Window dressing wise, definitively Nvidia is a strong candidate. So channel wise, you're looking at the 1, 2, 3. You got this major breakout level. I had forecasted that. It happened. That it was going to take out 174. And there's no sitting around with Nvidia. You either get in or you just sit there and cry. That's it. You got with these high momentum stocks. Rule number one: you gotta have some position. You can't be sitting around scratching your head saying, "Let me see." It's called analysis paralysis. Okay, that's a big term in Wall Street. Too much analysis paralysis is going on. So I'm not saying you shouldn't analyze. Of course you should, but you got to speed up your analysis in your head. And more you do tactical work on the trading side, your emotional analysis part is going to get reduced, which is great. You got to suppress emotions. So bottom line is, with these type of stocks, that's it. So here you got this channel here, which comes to about 177.63. That's a minor move right here, right there. Channel 1, channel 2, channel 3, and then this one, which I'm going to highlight. And look how all of the prices make contact with these channels. So these lines, thank you, Fish Eyes, not a problem, man. So he has to run. So a bottom line is that this one is, and notice the points of contacts on each of these lines. Either their resistance or their support. So at this point, this is the big deal. All right, guys? This is the big fat breakout. This breakout, 176.44.36, 174.36, is the line you do not want to cross. Because if this breaks, then you are going to basically test first the channel number 1, 172, or you're going to come down and test this level here, which was another breakout. And there's a gap here. See that gap? So once you break this channel, you fall into the gap. And you're looking at sub 170. So you don't want to be hanging out if there is a red candle that slices through here, just go short. You don't need me, just go short. And of course, you use this chart that I'll be posting as a roadmap. Because that means that the stock can drop approximately $5, which is a lot, because options are cheap and you can make a lot of money on the puts. In the meantime, you got a consolidation channel. This is a consolidation channel, ladies and gentlemen. Okay, which intersects here. So I'd be watching the 177.29 level. Now, this is why I say use investing.com. So you can basically draw these lines very easily, just similar to mine, because and you'll have a roadmap. Well, I already give the roadmap, but you can mimic that and just trade much more efficiently instead of saying, "Oh wow, it's down 2. What's going to happen now?" You're there. So here's your lower end of the consolidation channel, which is 176.54. So do I think Nvidia? This I like a lot, Corey. This I like a lot. All right. If this even bounces up a little bit here, you're looking at the stock at 181. Nice move. That's $2. I'll take the $2, both in common and in options, which means you're up more than 100%. Well, close to 100% on a $2 move. There's a gap here. That gap is 181 to 186. Is it possible that, and each one of these candles can be played for decent money, because these are not expensive options. Is it possible this happens? Absolutely possible. Nvidia is a great company. I think it's a $500 company in years to come. I mean, their expertise and technology on artificial intelligence is out there. Used to be just a gaming chip, right? I have Nvidia graphics chips running my screens. So, but it's gaming, it's Bitcoin mining, it's hardcore processing, hardcore GPU, GUI processing, hardcore stuff. So this can happen. So that's the answer, Corey. If this breaks, we have major support at this level. So I'll be watching it very carefully. Either it's going to do that, or it's going to do this, or if it breaks below here, short nicely all the way down to 167, even to 162, which was a very powerful trading range before it broke out and took off. Nvidia is all about trading ranges and breakouts. That's what it is. It broke out quite a bit, so it decided to do its thing. This I like. I like these support lines that are there. Does everyone understand this part? A little bit? Clearer than before? Yes. Consolidation channels. This is when traders all freak out, like, oh my God, is this the end of it? No, it's a consolidation channel. This was sudden. There's no way you could have reacted to it. We were trading it nicely. We took profits. We were still long it, and then this drop that came. It was a complete manipulative move. They released the news, rumors that Tesla might be dropping Nvda as their artificial intelligence chip contract. No one's confirmed anything. AMD jumped, spike. AMD's Lotus, it didn't matter. They were 24 cents. They went to 52 cents. Sold a bunch, bought back. They're at 11 cents right now. Took my money off the table first round, next round, just buying them cheap. Just in case AMD, their competitor, did sign a thing with Tesla, that stock is going to jump 15% like it did on that rumor. So anyway, so this you couldn't have reacted to because it just happened. All right, let's take a look at a very powerful, talking about momentum trading, I'm going to cover two more, is what happened with Intercept Pharmaceuticals, right? Icpt. So the Icpt charts are all on my thing, and I'm trying to see because they're on my. Bear with me one second. Very, very important to learn. I know I push people to basically use their mental, their tactical discipline, and just use the inner strength that they have. And that's why I push people hard. And sometimes I do. And it's frustrating that a lot of people did not take advantage of it because it was almost the most sure trade. Just, it just happened so fast that you still had time to get in. So, so saying all that, let me just, I'm trying to find the thing. Here we go. So that's what, sometimes, I get into people's faces a little bit. I mean, come on. You just can't leave those alone and say, oh, well, didn't work next time. You don't get next times like that. You don't get options that go up 6,000% in a day. So, even if it's down, you're up, let's say, I was alerting throughout the day on that move. I mean, on the breakdown, I'm bringing it up now. You can always get in, and many of you did, along the way, and scalp 100, 200%, because it's just clean swipe, full scale, demolition derby. You don't get those too often. So when you get them, don't just sit around. Just do it. And it's not like the options are like crazy expensive. 1 second. Bear with me. While I'm at it, I'll leave something out here. Oh, let me just cover one thing quickly. This is the chart of the market. This is a chart of the market since the 20th, which was Thursday, right? Heavy volatility, but unless something dramatic happens over the weekend, aside from, put up the news, there was possibly a small test, North Korea again, getting kind of boring here, but it was a very small tremor underground. So the seismic specialists, the experts don't believe it was a nuclear test. It was just maybe a natural tremor, earthquake. Because when you start doing nuclear tests underground, that area gets kind of moved around, right? So even when you're not doing it, there are small seismic shifts underground. So these tremors are detected. So anyway, it doesn't look like it hasn't been confirmed. So whichever the case. So when you look at these huge volatility moves, right? And this is what we play. You got to keep in mind that there's a lot of movement. But when you get these big, this is the simplest way. When I show these very large, called long tail hammer reversals, long tail hammer reversals, all right? You got to get it. And within a matter of hours, if not the following day, you are going to get a substantial return on your money. This is where it gets choppy and it's hard because you can't trade. You can if you're a very active trader, but trading small chunks of 3-4 points on the S&P doesn't do it. Trading 20 points on the S&P type of spreads is, you can just buy the call, boom, sell it. These are sudden moves. We know that. Again, this is what the market is doing. So bottom line is, it's not, you can look at this chart and say, oh, we're just on a one-way thing down, because these patterns are showing that we're probably going to get up here, which is roughly about 30 Dow points, 30, 40 Dow points. Individual stocks are going to go higher, more. And this is your next supply level, because this is where the market broke, right? Nothing like, not a crash, but it broke. It came down, 30, 40, 50 points. So bottom line is, it looks likely that you're going to get that move here. So look at my other charts, and I've drawn what the roadmap might be. But if you look at the broader picture, you got to keep in mind, people who are not technically savvy, that when you're looking at my charts, you can pretty much clearly see that we have a very significant bottom around these levels. You got multiple hammer reversals, which are tradable for 30, 40%. You don't want to make 30, 40% on your money? Well, I don't know what to say. And we're, it's very likely that we're going to get another one of these moves towards these levels. And this is a major resistance. If we break out, you're going to get that higher move. If we don't break out, it's back to chop central. All right, am I clear on that?
Yes.
This is the way markets work. There's volatility. That's it. Now, talking about going back to it, I'm just pulling up the.
Hey, Frank, do you find yourself more successful when you're buying these calls in the money than you are out of the money?
It all depends on the speed and momentum of that stock. Sometimes in the money produce less ROI or return on investments percentage than if it's out of the money. If it's moving in a move direction like this, right? Then out of the money calls will give you a higher return on your money profits than if it's in the money. That's just the nature of delta and gamma and theta of individual options. In other words, simple English, if something is moving fast and furious, then, let's say it's 1 here and it's 5 here, and you bought the calls in the money at 1, you will make less money than if you bought calls 3 points out of the money, because of the speed and momentum of that individual stock. You understand what I just said? So
yes, sir. Thank you.
So I generally buy close to the money, if you notice, right? The only time I buy out of the money, 15, 20 points, are the price lines, like the auto zones, because those are big fat movers. They don't move $1 or $2, right? They move $10, $20. So seeing the projections on my chart, I will basically go ahead and at that point buy out of the money and not necessarily in the money, like I did with the 550 calls and stuff from that day, which net my AutoZone trade, phenomenal. Despite that 1 day earnings hit, I just sold AutoZones from $1.50, $1.50, $1.60, the 550 calls, which were expiring Friday, which I had alerted. They went to $17, guys. 17. I sold my last one around 14. Now you tell me what kind of return that is. Okay, let's say my average cost was a little bit less than 2, but I'm going to call it 2. So that's $12 divided by 2. Okay, that's 500%, like I posted on my thing. That's 500% on a bunch of lottos, all based on the charts. I wouldn't have bought them if I did not see, and I'm going to show AutoZone, that if I did not see that heavy support at certain lines. So let's take a look at this, guys. All right, anatomy of a killer trade, no question, Hall of Famer. So let's get it big. We got it big. Nice. So here's what happened. All right. So follow this carefully, because next time you see something like this, don't be sitting around scratching your head saying, "Oh boy, it's too late." This thing, by the way, can go lower. It went to exactly. By the way, this was earlier on in the day. This was right before the market started, and it went here. Went exactly where my chart showed, the lower Bollinger, and it went right here, because the low for the day on was 60.97. What did I show? 60.93. Guys, you can't get any better than this. 60.97 was the low of the day for Icpt, Intercept Pharmaceuticals. And I had shown, based on the charts, you can make these things up, right? 60.93. That was the marker. And this was at 9 a.m. So here's what's going on. So here's the first stock falls. There are rumors that some patients died because of clinical trials. Guys, you don't need to be a frigging physician. You hear death, patients, doesn't matter whose fault it is. Of course, it's the fault of Intercept Pharmaceuticals. One of my good friends and trader, JB, loves Intercept Pharmaceuticals. We've traded this on the long side too, in a big way. And he's like, no, the patients overdosed because it's their fault. Yeah, really? You're the one who's the drug dealer. In other words, you're the one giving the doses. So you're telling me in a clinical trial, you're not monitoring what patients are doing? It doesn't matter whose fault it is. You are liable. Do you understand the thinking behind it? You can't be like, oh, it's the patient's fault. What, are you going to go sue the patients who died and their families because maybe he took a little bit more? Nah, it doesn't work like that. So anyway, I see this break. I say, I want to short this. So I short it here, somewhere around this level. Stock goes up against me. Okay. Now I said, no problem. It's not like a wild, huge position. So I let the options, I think it was like $2 or $3 on the puts or whatever the case may be. This is a dramatic story, all right? So just reality of what happens in the stock market. So then then it comes down, it falls again. I add to my put position more. Moves down nicely. I'm up. I take a little bit of profits. I still think the stock's going down because this is an hourly chart I'm showing you. I have charts on Icpt, which I'll right now show you, which showed the weekly. And I'm sure, Corey, you remember that. Remember the weekly one? It was a descending triangle, bearish candle. I knew it was going to go down because big money always moves faster than what StockTwits is saying, what our traders are saying, what I think, who loves what. Patients are dying. That was the whole thing. And the technicals are supporting it. So I go short. Stock goes up against me a little bit. And this time it goes from the 86 range to 9600. Am I panicking? No, because I'm watching the internals. I want to get into it right now. That's real advanced coaching understanding. By that time, I'm seeing it getting overbought. So why the heck am I going to buy the stock when I'm seeing it getting overbought like this and curving down? So I short more. So by this time, I have a whole bunch of these lottos, right? Because I'm down like 40, 50% on it. I'm like, there's a lottos. It's just, I'm going to stick to my guns. Remember, shorting is tough business. That's why the short sellers like Jim Chanos, who shorts Tesla and other stock, these guys are not like one-day players. They're waiting like a patient hunter. Get that whatever prey you're hunting, on your scope, on your rifle. So I'm watching this channel here. I've drawn this channel. Everyone see this channel? Yes?
Yes.
Okay, exactly. So a stock falls like this, and this is basic technical analysis, and I've explained that very clearly on my videos, which are basic pattern analysis. Stock falls, goes up a little bit. It is still a bear flag. This is known as a bear flag. This is a bull flag. Stock goes up, consolidates. That's a bull. Okay? Consolidation simply means profit taker comes in. It generally, high probability, breaks out. Many of you have been with me, seen this dozens of times, hundreds of times. Bear flag, same story. Short covering. Shorts covered. I mean, to them, it's like a gold mine. Like, oh, wow, you know, I shorted the stock here. I wish I shorted the stock here. I didn't. 126. And the stock goes down to, crashes to 90. What do you think? They're not going to take some of their profits? Of course they will take their profit. That's known as that little profit-taking, short covering bounce. This is a bear flag. So I'm watching this bear flag carefully. If I see it break out, I'm going to go long. I'm ready to go long on this baby. What do I care? And that long would have generated maybe 20 points from it to come down to where it broke down from. At least 10 points. But I leave the lottos and I buy a little bit more. By this time, I have brought my cost down from $2 and change, and I had two sets, right? I had this week and next week's, 80 and 85s. Now, how did I arrive at 80 and 85? That was the original. That was the original trades. I arrived it based on my charts. And this has a series. I have a series of these Icpt charts over a matter of couple of days. So my charts are showing that, and this is an hourly. I have a daily that showed 80. Like I'm showing, okay, these are channels, right? They got skewed a little bit. Anyway, so I'm seeing the 80 level. I am seeing max move 70, which is this line here. So I basically buy out. Now here's the case, Corey, where I bought out of the money puts, not in the money puts, because I think the stock's going to break. So I know when it breaks, it doesn't break in $1 or $2 increments. It breaks in $5, $10 increments, right? It's a biotech stock after all. So bottom line is, I have the 80 and the 85s while the stock is at while the stock is in the 9,900 range. Then comes cha-ching, the jackpot, right? And when did the jackpot start? The jackpot started on the 21st, which was Thursday. Now, I don't care if you guys are in the trade or not in the trade. Prior, you don't need to basically keep on buying something and be down 60, 70%. But when I see this break on that news of the FDA warning, that's a death blow to a biotech. What's to think? It's a freaking FDA warning on Ocliva. I think that's their drug called. And you see, again, a massive candle breakdown from a bear flag. You gotta go short. And I'm telling you guys to go short. What's there to think? When you see something like this, that was my frustrating part. I want everybody to be in this trade. Many of you did, but I wish everybody was in this and followed this through. You see these breaks. What do you think these breaks are? Just red candles? These are billions of dollars leaving a stock. Not you and me, not grandpa, not Uncle Joe. Institutions. You see institutional fallouts of this magnitude. FDA warning. And I've been walking people through that. What if the FDA temporarily bans their clinical trials, which can still happen? This stock is good for 40 bucks. Letting you know right now. Another 20, 25%. So bottom line is, let's talk about this. You see this. You see my alerts. You see it just one after another. So let's say you didn't get in here. Calls when so my average cost is 32 cents. I don't want to go into the details of where, how many I had or whatever I had. But do you know what the 32 cents, I mean, at the beginning of Thursday, they were at 15 cents. If you tried to sell it, there was no bid. 15 cents. I posted it several times. Maybe some of you guys didn't look at it because it's hurts. Where did they go by Friday, by the time it reached my target? Somebody answer, because if you guys didn't look, that's in self-denial, man. That's bad stuff for a trader. Where did it go? These 15 cents. I even put a chart up there on that. 15 cents went to what? Jasco?
26 or something.
23. That's correct. Guys,
23.
Guys, that's 15,000%. Now, did I hold all the way to 15,000%? Of course I didn't. What do you think I am? Some sort of like genius? No, I kept on. I kept on adding harder when I saw the third candle breakdown. I actually most aggressively shorted when I saw the bear flag breakdown. That's a given. This was one of the surest trades. And if this happens to a stock on the upside, which we see sometimes on the price line type of stocks, you don't think, you just buy. Because the green candle, move it. This was a complete breakdown. And then covered, once it started to hit my lower zone. Remember, these charts are structured to perfection. They hit my lower zone, which is the 76 level, 80 level. By that time, it's way up. By that time, it's up 600, 700, 800%. I'm moving fast. Some of you guys got in at these levels. This is where it gets tricky. It started to basically create a small bear flag here. Watch. See that bear flag right there? I'll clean it out. Show. It's amazing how technical analysis. See that? That's a bear flag. Remember bear flag? Like that? This was the big bear flag. Right? This was the big one. Another little one. Why? Shorts are covering. So I told people to buy cheaper out of the money. I said, go buy the 70s. Sell the 85, 80s because they're up a gazillion points. Then buy the 60s, the 70 puts. Because believe it or not, it didn't go below 70. You didn't have strikes below 70 in some of the near-term options tables. Right? So another bear flag, another breakdown Friday. It opened down $7. Opened down $4 and it started to crash. Went all the way down here. So when you get something like this, okay, 15 cents, 10 cents actually showed on the TOS thing. There's no bid. I can't even sell my 32 cents, right? And they go to $23. That's 15,000%. Along the way, you could have taken a joyride for free. All right, seriously. So, and all that was being shown visually. It's not just an alert and you're blind. You're not seeing, like a lot of services, you just get the alert. So you have no idea what the charts look like. In my service, you get the charts. So you make the determination. Do you want to short this company based on what you're seeing? Billions of dollars flowing out. Who are we as pikers in the real world of big money to say, oh no, it's just going to turn around and go. I don't care if the billions are, if they're selling billions. No, you got to jump on the bandwagon. So, this is sick. This is sick, beyond sick. Okay, but at the end of the first day, end of Thursday, they were up 7,500% or more. I think they were up 9. So if somebody had, well, forget this. Let's say you got in at 1 and you put $1,000. Okay, forget about selling at 23. Okay, even though it was pretty much clear as day that it was going to hit the lower Bollinger. Let's say it's 15. So your 1,000 would be $15,000. Guys, it happens. And when it happens, don't overthink, please. Because when these type of things happen and you don't make that, you make some substantial money, which is probably the best trade in your life, that gives you a level of confidence to do the other stuff without a flicker in your thing. You look at it, you're confident, you take a little bit of the money, you just have it made. I know a trader in our group, I will not mention because it's too big, made close to $250,000 on this trade on my alerts. More than $250,000. I will never post that feedback because it is staggering. It's actually not staggering. The frigging thing is up 15,000%. He just stuck with it. He also shorted some common. But forget that. Just mainly through the puts. The September 29s, September 22nd, September 29s, which I constantly kept on thinking. And I will revisit this short, by the way. It ain't over. It ain't over. Now this is starting to bottom. If it starts to move higher, the slow stochastics, I'll be certainly showing that. I did say the 65. It's possible it gets a dead cat bounce again. And why is it going to get a dead cat bounce? Because that's what happens. Bear flags. 1, 2, 3. And if I see that bear flag, and you have to use some skill and expertise. That's my job to do. That it looks like a bear flag, then it's going to be one more leg down, and that one more leg down is basically what I showed on. I will pull it up on the other side, which I have here, which is a longer term chart of this broken baby. And guess what? The big shots now, the Citigroups, the Wells Fargo, now they're downgrading the stock. Great. One went to a neutral. You know what a neutral is? It's a death knell from an analyst. That simply means, yeah, that's it. Sell the crap out of it. See you later. They went neutral. I think it was Citigroup. First thing in the morning. So obviously there will be trades, counter trades, meaning short covering guys who are going to be, one second, who are going to basically cover their short. So you get these little bounces. Little bounces. Let me just try to show you the, trying to find it. But those can be shorted. So don't write this off. The stock is now going to zero, but it can go to 40 bucks, 50 bucks. 50 shows on my thing. And I am going to show that. So bear with me 1 second, guys.
Hey, Frank, while you're getting that, when you're looking those big spreads, what do you do on those puts? Do you just put something in the middle?
Yeah, I just put something in the middle. I play around to see how quickly they'll bite it. And if it's a crazy move like that, the spreads don't matter. So the crazy spreads happen. It's a damn good question, because the market makers know it's going to be a one-way move down or a one-way move up. So you got to play the middle. You got to buy the higher midpoint. The higher midpoint. That's what I do. And I test off with 1 or 2 first if it's an expensive call. On the other ones, I'll buy. You put a tester in there to see where they're going to bite. Yes. If you wait around too much, you're already losing money because the stock's already moving down, and those spreads keep on widening. And so each to its own. A high momentum stock, biotech stocks always have a spread. Always have a spread. Okay, so you got to play the middle. You got to play the higher midpoint when you're buying those options. Yeah, you get that? So all right. So now let me show you this. Actually, it's in here. 1 second. Yeah, it was 2,200%. What a joke. And this thing went up. It was 230. Look at that, 230, and they went to 23. Anyway, somebody will, some traders will say, oh, well, that's just an aberration. Yeah, it's an aberration. So what? We called it. You know what I'm saying? You're going to be sitting around. Okay, so here was the breakdown of the bear flag. And I didn't have the, for some reason, it's not showing up here. So look what's going on. Lower channel, 78. Breakdown. This one comes to 60. This line here. The one that you saw on the other side. So even at this point, on September 21st at 12:28 p.m., I'm saying get it, because this is no good. Yes, there is support here at 86, but then that got taken out. So after the second candle, it's a given. It's a given that it's gonna go. Let me show the one where it shows 50. See, originally my max pullback was at 85. So One second. Anyone else other than Corey, if you have quick questions, I'm scrolling through to find that chart. And by the way, this is the media section. Everything is here. No, this is not the media section. This is actual scrolling through the actual feed. Please ask me any questions you'd like. Because for you guys to understand, not for me to, Try to make you understand. Kyle, any questions? Jose, any questions? Okay.
Not right now.
No
I'm just
problem.
taking notes on everything that you're doing. So
No problem. That's good.
Frank had also said that the FDA might reject that drug, which could even drop it even further, I read.
Reject what drop? The Ocleva? I thought it was I thought that was already. Oh, I see. Like, yeah, well, if you're an FDA panel and you're seeing patients dying, do you think you're going to approve it? I mean, think about it. Yeah, there's a lot of negative. Okay, this was the classic chart that I had drawn when the stock was at 96. Okay, remember this? Now I don't normally draw charts like this, but I'm seeing this, and I'm this is the methodology. Okay, here's your channel. See the downtrend channel? Okay, here's your downtrend channel. Oh, these are all short zones because it's still within that bear flag and starting to curve down, and this going on. So there's your other channel. So here's your downtrend channel. So I figured if crap hits the fan, this is the red zone. And guess what? It went to the red zone and it went below the red zone, somewhere around 60. This is where the big money was made. This is where the big money was made. This is where the peripheral money was made. So that's it. Now, let me show you. So you guys understood the anatomy of a patient short trade based on technicals. Yes?
Yes.
Good. And remember, there's always an element of luck involved. That's everything. That's a given. But technicals will enhance your luck, your probability of getting lucky. And actually, I'm going to stick to this. Than just your emotional way of trading, the old-fashioned way. That's all. Now, let's take a look.
Hey, Frank, let me add one thing. I got to tell the viewers, Frank has more luck than anything. Frank hits more stuff than he misses.
No, this is not a matter of like luck. I don't have more luck than anyone else. Everyone has, look, God has given everyone a portion of luck. Believe me, they have. The question is, how are you going to use it? So I use it to my max because I look at things very differently. I use it to the max by using my technicals, my knowledge, and I try to share that with you guys. But everyone has the same portion of luck that's been given. The question is, that's it. Now, here is another case of Chipotle. Chipotle 295, they're saying the queso sucks. What do I care? All I know is that the stock hits a multi-year bottom at this level. My technicals are starting to turn around. And this was a beautiful trade. It's still a good trade. So the stock's here around 295.96. I'm alerting the stock. The stock hits what on Friday? The stock hits exactly the upper end of the scale. You can't make these things up, guys. 317.34, right here, right where I said the upper channel was. My sell zones are between here and here. That's a 22-point trade. The calls, ladies and gentlemen, went up approximately 200% plus. 2 days. 2 days. All you had to do, and I have certain traders who are very busy and they don't come in the chat room and stuff, who just look at my charts. They're ACS students. They have been with me as ACS or advanced coaching students for months. They get it. They just stick to it. They're in fact better than me when it comes to like handling some of the trade management stuff. And this is it. I kept on showing it. It's a wide channel. See that? Wide channel. There you go. And right, it gets to the upper end of the channel. Probably going to do the same thing. It's going to sell off. Or if it breaks out, we'll see you later. At that point, more stuff needs to be shown on the upside. At that point, we are looking at approximately 325 to 330. But that remains to be seen whether or not this channel here is broken higher. But it did exactly that. And again, repeat. The big fat green candles. Minor profit taking, big fat green candles, which kept on going like this. Little pullback, another green candle, and then it landed up here, right here. Can't make these things up, guys. So certain stocks are institutional stocks, and doesn't matter what the news is. Doesn't matter what the news is. Okay, and so we will look at something from the earlier AutoZone, right? Like Corey correctly mentioned, worst conference call. The guy, very, very smart. He's saying his numbers are going to be tight. Stock basically earnings, it falls $27. And it was higher. I think it was higher after the earnings. Like when it opened up, it was up like $10. So I had a call at $17.50. I don't want to go nuts on it, right? I figured, hey, if it jumps up $30, like I'll take it, I'll run, fantastic. I managed to scramble out of it around 10. So I lost, That's another thing, another stock that could have been shorted, but I'm watching the charts on this. I'm pulling it up right now. And I decide to basically, by the end of the day, and like Corey correctly mentioned, he's like, worst call, this thing's going to 525. He buys some cheap puts, like you did, Corey. Cheap puts. So no problem on that. EFX trade is out before. EFX looks like it wants to go higher. I don't have a chart here yet for you, but it is also a bear flag. So watch out. The downside ain't over. So I will try to show you a quick thing on Equifax in a second before we leave. 1 second, guys. When the hell was AutoZone? Hold on. I'll pull it up from my other screen. Okay. Okay, that's a great one. Hallelujah. Welcome to America. So here's where this is the drop, right? Here's where I said, guys, stock go long. Why? We have multiple support zones here. Very simple. You got the 50-day moving average, the red line, still trending higher. You got the 34-day moving average, the orange line, still trending higher, even after a sharp drop like this, which was on earnings, after it shot up. Remember, it shot up first before it went down. So it was over 580 before it, that sudden reversal. Anyway, this is trending higher. 50 days trending higher. And it bounces exactly at this line, which is the 150-day, 150 SMA. Now, this is a 4-hour chart. It's as close to a daily chart you can get. So 150 SMA is a critical line. I explained that earlier in the session, right? This magenta line. Look at the triple bottom here in the same day. Triple bottom. Not the same day, the next day. Now focus carefully. This is the drop. This is the next day, slight bounce. And this is when it starts to create a green candle. Great time to go long, whether it's 534, whether it's 545. I'm like, buy. I put out the trades out there. I said 550. They were 550, 560s. So this is basically the entry point is right at that support level. Or if you're late by $3-4, who cares? You're starting to see the first candle formation. Let's look at this. Same stock. Look what's going on. The stock 534, 532 was sort of the entry level. Stock's at 561. 3 green candles. And you're seeing and this is a daily now. So this is extra powerful. It's starting to turn. All the lines are nice. Shorts are getting really scared now. Like, hold on a minute here. This stock is supposed to be at 525 down here or lower. They had such a crappy quarter, That's why I said stop analyzing. You can sit. I've sat on more conference calls than you guys put together in your lifetime. Of course, that was my career. And trust me, you will learn very little from those conference calls. Very little. Never read just the headlines. Just like in life, there are layers of truth underneath it. Bottom line is, it's moving. At this point, you could still buy it because this is big. Let's move on to the next one. Now it's getting really scary. It's 560, 570. I'm showing the levels here. This is big. There's a big gap here. You'd be surprised if it fills this gap and goes to 620? I wouldn't. But all that has to happen because the mid channel has to be broken out. Remember, I have a sell signal here because it's a mid channel. And that mid channel is 590, by the way. This is still cooperating. This trade is still on. Now it's really scary. It's 572. Like, hold on a minute. The calls are up 400% plus. They're just minting money. At this point, you got a pattern. It looks like a rolling. Well, it's a double bottom. No question about it. It's a double bottom. Look at this. 1, 2. A double bottom breakout. And then comes earnings. Bang. Now it's well above that. It's taken out what it was before the earnings. Very bullish. This is good. What's the last one I got? No, that's not relevant. So bottom line is, I was showing the volume. Oh yeah, I was showing the volume. What day was this? It was the 18th. The 18th. That was the day of when the stock, right before earnings. And right before earnings, there was big buyers at the end of the day. Anyway, so I'm going to wrap up because, I got to do stuff with my family. So we got what you guys got today was real life examples of momentum trading. All right. If you want to really get into it really deep, I invite you all to sign up for the advanced coaching sessions. They're cheap, they're effective, and they're going to help you lose less and keep more. And that's a fact. And on that note, have a great day. I will be doing a free my weekly update on the markets Sunday evening. Looks like so far that's what I normally do around 7-8 p.m. Do attend that, and I look forward to having a great week with you guys. And like I said, it's a discipline of technical analysis and tactical trading. It is not something that happens in one day. It's practice, practice, practice. I am constantly practicing, learning, moving on. I am sharing the real stuff with you guys, not the fake stuff. And that's why all of you should go out there, get your friends to join Clueless Day Trading. Have a great weekend. God bless you all.